Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 17th of October, and we had mostly positive action for the market this week, but it was very choppy. These numbers are a little bit deceptive because we closed on the lows a week ago today. So let's take a look at these charts and make some sense of it. The S&P 500 came down to the anchor off of this August low, which has been important several times before, and it also touched the 50-day moving average in that spot, which made it more important. Now, where we are in terms of the shorter term time frame, the 30-minute time frame on the right, you can see we're having a little bit of trouble with this blue month-to-date anchor. The 5-day moving average started turning higher here late in the day, but the real story is the volatility, and that while we were up 1%, it wasn't an easy 1% to get in terms of buying and holding, because we saw all of this volatility in here that really made it difficult for anyone except for day traders. So it seems to me as though the market, we've got earnings that are starting to really flow, and we've got some big important ones next week. But the market is slowing down a little bit. We saw a lot of speculative names starting to lose some ground this week. You might look at this boxed in area as a shoulder, a head and a shoulder. As we know, what a head and shoulders pattern is just a pattern of higher highs and higher lows going to lower highs and lower lows. So I don't think we're making a top. I think it's more likely we undercut this, scare some people, time correct a little bit, and then probably continue to move higher. The path of least resistance on the longer term time frame, the weekly time frame, is still clearly higher here. So I'm not going to try to fight that and pick a top. Now, if it breaks below this level, it doesn't mean I'm going to just automatically buy, because I wouldn't buy the dip. I would buy strength after, hoping it could do something like this and continue to move up. But for now, going into next week, it's going to be just a little bit, continue to be a little bit cautious until we see some of this volatility, especially the headline volatility, tampered down a little bit. And I think the earnings are going to be the catalyst on the individual stock basis that kind of will take a lot of light away from the overall market itself and make the trades easier in the individual stocks. The NASDAQ came down to this 590 level, which is also the anchor off the September low, and you can see that's where we found buyers. We didn't find buyers at the 50-day moving average. We found the buyers from an important point, an important point that is important to the market rather than just a time-based 50-day average. This is what was important. Next week, ideally, we would come down, undercut the 50-day moving average, come down to the anchor from the August low, and then recover back up. I think there's a lot of people looking at these markets as saying, hey, they're making a right shoulder, and it would be likely that we trap shorts under there, and then come back up. That's what I'm looking for. But I'm also looking for this volatility to really tamper down before I'm looking to make any big-sized commitments to this market. The Russell 2000 broke out to a new all-time high this week, spent a couple days there, and then pulled back in. This was the important level it needed to hold in the short term. It broke that, but that doesn't mean we have a problem here by any means. We're still in a giant uptrend. If we pull back to the anchor off of, well, if we could do the handoff, you can see that first we have the anchor off this important low. Then the last time that was touched, we anchor from there. That's an anchored VWAP handoff written about in my anchored VWAP book. And that has been an important level. So 240-ish looks to be important. You can take that kind of sideways and say, well, maybe it needs to slow down and let the 50-day moving average catch up to it, or perhaps a little bit deeper pullback and then start to turn sideways, rebuild for continued upside. Semiconductors continue to be the real light in this market, not being led, however, by NVIDIA. NVIDIA broke this resistance and it made a higher high, and then it broke the higher low here. So it's kind of just trapped still under this, let's call it 184 level, and below with a declining 5-day moving average. I don't think there's a hurry to get back into NVIDIA, because this is telling us until it can get, it needs to get back up above and hold above 184 at 185 for it to become neutral, and then build a little bit for another push higher. The real leadership in this group has been from Micron. Since that gap up a couple weeks ago, it continues to hold on, and Micron as well. Micron's been a super standout here. So that's where your leadership in the semiconductors is. Biotechs have had this really great run. Let's back it up to the weekly time frame. And it broke out to this new high that we've been talking about. And it's getting pretty extended up in here. If you're long the biotechs, don't be complacent. Look at them and say, hey, we're extended. It's maybe time for a little bit of a pullback. Is there any evidence here on the daily time frame? No, we still have a pattern here of higher highs and higher lows. This is the most recent relevant higher low. And on the shorter term time frame, over on the right, you can see that this month to date anchor has been important so far. So if we pull back down to the month to date anchor and then kind of rebuild a little bit, that would be bullish for this. It seems likely that we might need to correct a little bit more through price and time, simply given the magnitude of this move, the breakout, and fact that it needs to just pause and catch its breath a little bit. Financials have been quite volatile in here, and this week what I was telling Alpha Trend subscribers was I thought it was good that we got back above this level after earnings. However, if we broke back below it, it could be troublesome, and in fact it was. Now, just as I just said about the overall market, that it would become more neutral. Let's go back to NVIDIA for a moment. It would become more neutral if it got above here. It wouldn't be bullish. And very same for the XLF. What I was saying is it would be neutral getting back above here, because the bigger problem was we still have this pattern of lower highs in here. And if we were going to hold on in the financials, we would have needed to do something like this. Instead, there was no reason to buy just because they got back above here, and they got hit hard. Of course, everyone read the headlines about KRE, the regional banks, and the problems there. So I don't trade the banks. It's really not a level of interest for me. Energy names continue to dance on this anchor off of the April 7th low. Just because they're on that level and testing it as support doesn't mean they're going to bounce from it and move higher once again. So let's take a look at crypto. Actually, the crypto is doing exactly what it's supposed to do. And if you recall from last week, what I was saying is the anchor off of the April low was being tested too frequently. Anytime any level of support is tested more frequently, we saw two things happening. The time between the test was less, and the frequency of the test became greater, leading to this breakdown. Now, if it gets back above 109.5 this weekend, it'll turn it back to neutral. Until it does that, though, I'm hoping that we continue to drop down towards this 102,000 level. I've got bids in there right now. Looking to the shorter term time frame, you can see since that break, that's this break right here, what do we have? We have this high, we have this low, we have a lower low, and this is maybe going to be the lower high. This is going to be the key level this weekend. If we continue to hold below that 110, then we're likely to continue down towards 102 to 100. Ethereum, I am also not enthused about right in here. I'd really love to see Ethereum drop down to 3,200 or so. That's a couple things. We've got the blue. This is the year-to-date anchored volume-weighted average price at about 2,900. The orange is from the election. That is at about 3,000. And then the April low anchor is right here at about 3,250. So 3,000 to 3,250. That's the zone where I'm going to be looking to make some purchases. I did get back involved again. And if you've been following me on this trade, I bought it last Friday, sold some here, bought some back, and then sold some here and sold the balance there. I've purchased more right here. So I trade this actively and keep Alpha Trends, not only on alphatrends.net, but on X for $10 a month. I've broadcast every single one of these in real time or in advance that I was buying in these zones. If Solana breaks back below this low, I'm going to bail on this bounce trade. But anyways, that's where we are for now. I hope you had a good week, and talk to you next week.